You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Hello traders, this is your Options News Rundown for Monday, June 25th. Our first story today is from Reuters. U.S. stocks are sinking in a broad sell-off, with the S&P 500 dropping more than 1.5% and technology firms bearing the brunt of an escalating trade dispute between the United States and other leading economies. The U.S. Treasury Department was drafting curbs that would block firms with at least a 25% Chinese ownership from buying U.S. technology firms, according to a government official yesterday. A Wall Street Journal report also said the U.S. planned to block additional technology exports to China. U.S. Treasury Secretary Steve Mnuchin said the restrictions will not be specific to China, but will apply to, quote, all countries that are trying to steal our technology. The S&P Technology Index dropped 2.8%, set for their biggest one-day plunge in 3 months. The Philadelphia Semiconductor Index dropped 3.8%, with chip makers taking a hit as they depend on China for a large part of their revenue. The so-called FANG stocks, Facebook, Amazon, Netflix, and Alphabet, tumbled between 3.2 and 6.6% today, with investors taking profits after the 4 stocks hit record highs last week. Harley-Davidson tumbled 5.8% after it forecast additional costs due to higher European Union tariffs on motorcycles imported from the United States. As of 12:55 Eastern Time, the Dow Jones Industrial Average was down 363 points, or 1.48%. The S&P was down 42 points, or 1.53%, and the Nasdaq Composite was down almost 188 points, or 2.44%. The CPOE Volatility Index, VIX, spiked to 17.92, the highest in 2 months. Next up is a story from Bloomberg. China and the European Union vowed to oppose trade protectionism in an apparent rebuke to the U.S., saying unilateral actions risked pushing the world into a recession. President Xi Jinping's top economic advisor said China and the EU had agreed to defend a multilateral trading system following talks Monday in Beijing. The comments made at a press briefing with Commission Vice President come as both sides prepare to face off against Donald Trump's tariff threats. Both China and the EU are coming under pressure from Trump as the U.S. president seeks to remake a global economy system that he sees as rigged against the world's largest economy. After months of rhetoric and threats, the trade fight seems to be coming to a head, with Europe imposing tariffs on $3.3 billion of American products on Friday in response to the U.S. barriers on imports of aluminum and steel. That triggered threats of further tariffs on European cars from Trump. Later this week, U.S. Treasury Department is expected to release fresh rules on Chinese investment in technology companies, Bloomberg reported earlier today, putting additional pressure on China, which hit back against the plans. Chinese investment has provided jobs and tax income for the U.S., and it should view commercial activities objectively, according to their Foreign Ministry spokesperson. The U.S. is due to impose tariffs of $34 billion on Chinese imports from July 6th, and Trump has threatened to impose levies on another $200 billion of Chinese goods. If that threat is realized, it could cut as much as half a percentage point from China's economic growth, and it could also hit the American economy. The last story today is from CNBC. Brent crude fell by more than nearly 2% on Monday as investors prepared for an extra 1 million barrels per day output to hit the markets after OPEC and its partners agreed to raise production. Despite the increase, which is intended to stop the gap between global supply and demand from becoming too wide, analysts said that global oil markets would likely remain relatively tight this year. Brent crude futures fell $1.27 or almost 2%, while U.S. light crude was down 43 cents at $68.15 a barrel, drawing on some support from Canadian supply outage. Prices initially jumped after an OPEC deal to increase output was announced last week, as it was not seen boosting supply as much as some had anticipated. OPEC and non-OPEC partners, including Russia, have since 2017 cut output by 1.8 million barrels to tighten market supplies and prop up prices. After officially meeting on Friday, OPEC gave a press conference on Saturday that implied a bigger increase in supply. Largely because of unplanned disruptions in places like Venezuela and Angola, the group's output has been below targeted cuts, which now says will be reversed by supply increases, especially from OPEC leader Saudi Arabia. Analysts warn, however, that there is little spare capacity for large-scale output increases. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. I'll be back tomorrow with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.